What is up, you guys? Nick here. If you're new, welcome. If you're returning, welcome back. It's Christmas Day, happy holidays. Santa brought with him some NIO presents for all of us good girls and boys. If you have watched this channel before, you will know that what I think is the most important aspect to NIO's business fundamentals and their trajectory is their battery swapping stations and infrastructure. You may also be aware that NIO is currently in a partnership with the Chinese government and local authorities, having created a division of their company termed NIO China. Because of this means the local Chinese governments will do what it needs to do to help NIO along the way and ensure their viability. In this video, I'm going to talk about this big news, what this means for NIO and investors, and where we can expect a share price to land in the coming weeks and months. We have a lot to get into, but first, Webull has improved their promo. They are now offering 4 free stocks worth up to $3,700 for free. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in my description. This is a complete no-brainer. Webull offers some of the best analytics in the game. They are a 0% commissions trading platform. Even if you get the worst stocks, it's still like a 20% ROI. Complete no-brainer in my point of view. If you haven't already, hit that subscribe button. I do a ton of videos like this and I would really appreciate it. I cover EV, tech, IPOs, and focus my investment strategy around innovative disruption. You don't want to miss any of my future picks. I first told my subscribers to purchase NIO shares at $7. Smash that like button for Lee Bin, and without further ado, let's get right into it. Alright, let's get to this news. Happy Christmas, y'all. So NIO recently signed a cooperative framework agreement with the State Grid Electric Vehicle Service Corporation. Together, they will jointly be constructing over 100 charging and swapping stations throughout mainland China in strategic locations in 2021. So what does this part of the news entail? Who's paying for this, and what will this do for NIO, and how will their share prices react? So State Grid Electric Vehicle Service Corporation is a wholly owned subsidiary of China's state-owned electric utility State Grid. This means, like many large corporations in China, that it is completely 100% owned and operated by the Chinese government. Remember that Hebei province in China, where NIO China headquarters are located, is striving to be an electric vehicle mecca. They are trying to be the epicenter of all things electric vehicle, and because of this, the Chinese government is working very closely with NIO. This was one of the aspects I was actually very looking forward to when NIO announced they were forming NIO China late last year in 2019. I had previously known that the Chinese authorities were actively promoting and pushing electric vehicle production, as China wants to remain at the top of the podium in terms of electric vehicle manufacturing and production. It's something that looks very good on them on the world stage, and they have no intention of losing this podium spot. This means they will continue pushing and promoting electric vehicles, and because of their joint partnership with NIO, NIO will be the beneficiary to this promotion. This will be huge for the Chinese economy long run, huge for Hebei province China, and ultimately huge for NIO and thus its share price. Alright, more dropping on Christmas. NIO comes in with the mic drop and delivers one of the coolest presents that we could have all expected. The two entities are also working on a project to develop vehicle-to-grid or V2G technology that will facilitate EV charging during low demand hours. This is an incredible step for NIO and once again shows why they are continuously pushing ahead of the rest of the pack, striving to become the most forward-thinking and revolutionary car company coming out of China. They continue to innovate and they continue to disrupt the status quo. Vehicle to grid, or V2G, is tech that allows energy from the battery to go to the power grid in a smart city, basically allowing energy to flow from the electric vehicle or the power grid in a bi-directional movement. By having this V2G technology enabled, a vehicle can be charged and discharged based on differing signals. These signals could be energy production or consumption from entities nearby. This is very akin to smart charging built into so-called smart cities, if you have heard of this before. The charged power from the vehicles can be momentarily pushed back to the grid to balance variations in energy production and consumption in a city wholly. This is a huge market and is expected to surpass 17 billion with a compounded annual growth rate of 48% for the next 7 years heading into 2027. This shows how rampant this technology will be in the coming years, and NIO is one of the first to adapt this technology. NIO and their partners are positioning themselves in this landscape ahead of the rest of the pack and is again another reason why this company will succeed. Guys, I've said it before and I'll say it again. NIO is doing virtually everything under the sun to differ themselves from the normal. This is a very intentional migration away from their competitors, and they are constantly defying the norm and doing things differently. Do you remember another vehicle company that constantly did things differently? Tesla. They're doing pretty well if you haven't heard. V2G will help China's economy and promote the usage of electric vehicles by reducing peak amount of load and distribute load to non-peak hours. All of these measures taken by NIO and the Chinese government are intended to increase EVs' accessibility and ultimately increase their usage. This joint partnership between the government and NIO is actually quite important for me. It shows their joint stake in one another's prosperity. The government is constantly promoting and pushing NIO as they have actual stake in the company, and ultimately they want more of their citizens to turn towards clean energy. Remember that subsidiaries for luxury electric vehicles almost exclusively apply to NIO as they are more than 300,000 yuan. However, they do have the removable battery that the Chinese government has granted applies to a subsidiary program. There are more and more hints continuously that the government is relying on NIO's survivability and prosperity. This deal is beneficial for both their economy in terms of power usage and lowering the effects of carbon emissions, resulting in less pollution, lowering the burden and cost of healthcare long run. NIO currently already has more than 150 battery swapping stations, and adding this to its infrastructure will be huge for their business operations moving forward. This fuels right into what they need to be doing and what they are trying to do. Without a fully robust swapping station infrastructure, many consumers have stated that they don't think an electric vehicle is feasible. We saw very similar sentiments play out with Tesla. What we saw is that Tesla sales were actually quite low in their early days prior to having a fully robust and strategic infrastructure system of recharging stations. Consumers don't want any extra hassle if they are turning towards a green and clean electric vehicle. They want it to be easier. However, once Tesla did hit a certain level of charging stations, almost akin to a threshold quantity, Tesla sales went through the roof. They actually stated that they needed far more than actually feasibly would be needed, as people wanted them to be almost as dispersed as gas stations. Mileage anxiety is stated as being one of the largest deterrents from consumers turning towards green and clean energy. Users don't want to run into a situation where they are stranded looking for charging stations. There have been many cases of users waiting long times at charging stations, sometimes hours on end, and with more charging stations, this both lowers the time people have to wait and decreases mileage anxiety. All of these same principles apply perfectly to NIO. With more charging stations comes less wait times and less mileage anxiety, which adds to the quantity of users purchasing NIO vehicles in the long run. Remember, we are thinking long term here. Charging stations also greatly add to the level of brand recognition and are actually quite sleek, futuristic machines. They bring in a degree of notoriety for this company that is unrivaled, and it draws the consumer in. They are quite sleek and cool looking in my opinion, and if I was just passing one by, I would surely stop and take a peek. This is free advertisement. It should also be noted that NIO intends on these swapping stations actually generating revenue for them in the coming years, more than breaking even. Right now, these stations cost about 2 million renminbi each to install and build. However, this number is expected to be cut in half and then some moving into next year. These stations will begin paying for themselves after a number of charges, and there are rumors that new vehicle companies will be formatting their vehicles to use NIO's already laid down battery infrastructure in the coming years. This was a huge risk that NIO played early on, building this extensive infrastructure, and now that it's in place, we will begin seeing the beginnings of the exponential growth curve in terms of revenue. Heading to their share price on the shortened trading period on Thursday, NIO was trading down about 124 to 45.77. There is going to be an extended period of waiting time as today is Christmas, so we're obviously not trading today or the weekend. Moving into the end of the year, many funds holding accounts increase their activity as they are trying to receive end of the year bonuses in terms of their performance. So we usually do see more volume at the very end of the year. And with this extended period of waiting, I do think next week in the closing of the year and approaching NIO Day is going to be extreme in terms of the volumes of shares moving. Because of this, we can expect huge volatility. And if we are in the red, I will be buying a bulk amount of shares as I always do. This company is going to be huge in the next year, and I really do see them hitting triple digits in 2021. They will have their new sedan on the market. They are releasing a 150 kilowatt hour battery cell pack, very likely on NIO Day. They are expanding into Europe. They are increasing their deliveries month after month and have been growing at over a 100% year-over-year growth rate for the past 8 consecutive months. This company is so promising. These are still the very early days. We as investors need to zoom out and look at how promising and how big this company could be 5-10 years down the line. We are long term. Anyways, everyone, Merry Christmas, Happy Holidays. Don't forget about the Weeble promo, 4 free stocks, free, worth up to $3,700. It's a no-brainer. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in my description. This offer ends soon. Don't sleep on it. Smash that like button if you haven't for Li Bin and NIO and their sedan. Happy holidays again. I will see you guys all in the next video. Thank you for the continued support. Take care. Happy trading. Cheers.